If you are planning to create a good long-term wealth between 2.77 and 19.2 crores with better risk-adjusted returns and downside protection, then you are watching the right video. I am Nilesh Bodhi from CoachFin, and let's see the top large and mid-cap fund for July 2022 where we can invest and create a wealthy corpus in long term. I have selected 4 funds, which includes Axis Growth Opportunities Fund, Canara Robeco Emerging Equity Fund, ICICI Large and Midcap Fund, and Mirae Asset Emerging Bluechip Fund. The category of this fund is Large and Midcap Fund. The launch date of Axis Growth Opportunities Fund is 22 October 2018. For Canara Robeco Emerging Equity, it is 2nd of January 2013. For ICICI Large and Midcap, it is 1st January 2013. And for Mirae Asset Emerging Bluechip, it is 12th of January 2013. The AUM of Axis Growth Opportunities Fund is 7,071 crores. For Canara Robeco Emerging Equity, it is 12,769 crores. For ICICI Large and Midcap Fund, it is 4,973 crores. And for Mirae Asset Emerging Bluechip Fund, it is 20,664 crores. As per Riskometer, all these funds are very high risk category funds. The minimum investment for SIP is 1,000 in Axis Growth Opportunities Fund, and you can do one-time lump sum of 5,000. For Canara Robeco Emerging Equity, the SIP is 1,000 per month and one-time lump sum is 5,000. For Axis Large and Midcap, you can start your investment with just rupees 100 SIP per month and with the one-time lump sum of 5,000. For Mirae Asset Emerging Bluechip, the SIP is 1,000 per month, and currently there is no lump sum allowed in Mirae Asset Emerging Bluechip Fund. Okay, I have chosen Axis Growth Opportunities Fund for a reason, and which we will see in the forthcoming slides. Let us now see the fund details. Okay, so the expense ratio for Axis Growth Opportunity is 0.5%. For Canara Robeco Emerging Equity, it is 0.57%. For ICICI Large and Midcap, it is 1.21%. And for Mirae Asset Emerging Bluechip, it is 0.7%. If we see the exit load, then all these funds basically they are charging 1% if we exit in 365 days. Okay, the benchmark for Axis Growth Opportunities, Canara Robeco Emerging Equity, ICICI Large and Midcap, and Mirae Asset Emerging Bluechip is Nifty Large Midcap 250 TRI. Okay, if you see the investment horizon, these all funds are good for long-term investment. So if you are thinking of short or mid-term, these funds are not for you. If you are consider a long-term goal basically which you are having in your mind, then this is the fund for you. Okay, Axis Growth Opportunities Fund is managed by Jinesh Gopani since 1st of October 2018. Canara Robeco Emerging Equity is managed by Sridatta Bhandwaldar from 1st of October 2019. ICICI Large and Midcap Fund is managed by Ihab Dalwai since 1st of June 2022. And Mirae Asset Emerging Bluechip is managed by Ankit Jain since 31st of Jan 2019. Let us now see the fund returns by these particular funds. Now, if we see the first year returns given by Axis Growth Opportunities, it is negative 0.70%. For 3 years, it has given 20.93%. For 5 years, we don't have any returns because it is yet to complete its 5-year span. And since inception, it is giving 20.01%. For Canara Robeco Emerging Equity, it has delivered a returns of 3.25% in 1 year, 19.03% in 3 years, 13.13% in 5 years, and since inception, it is delivering 20.61%. For ICICI Large and Midcap, it has given 13.96% in 1 year, 18.11% in 3 years, 12.43% in 5 years, and 14.57% since its inception. Mirae Asset Bluechip Emerging Fund, it is delivering 2.85% in 1 year. It has delivered 20.59% in 3 years, 15.25% in 5 years, and since inception it is delivering 22.61%. If we see the portfolio allocations, then Axis Growth Opportunities Fund has 91 stocks in its portfolio. If we see the allocation by market cap, it is investing 54.38% in large cap, 35.69% in mid cap, and 5.86% in small cap. If we see the allocation by sector, it is investing 22.37% in financial sector, 13.68% in services, and 12.49% in technology sector. If we see the top stock holdings, it is investing 8.22% in Bajaj Finance, 5.27% in Tata Elxsi, 5.21% in PI Industries Limited, and 4.29% in Avenue Supermarts, which is nothing but DMart. If we see Canara Robeco Emerging Equity Fund, it holds 58 stocks in its portfolio. If we see the allocation by market cap, it is investing 56.3% in large cap, 34.78% in mid cap, and 3.13% in small cap. If we see the allocation by sector, it is investing 26.85% in financial sector, 10.73% in automobile sector, and 8.65% in technology sector. And if we see the top stock holdings, it is investing 6.08% in ICICI Bank, 5.77% in SDFC Bank, 5.29% in Reliance Industries, and 4.88% in Infosys Limited. If we see ICICI Large and Midcap Fund, it holds 80 stocks in its portfolio. If we see the allocation by market cap, it is investing 56.1% in large cap, 34.44% in mid cap, and 4.44% in small cap. If we see the allocation by sector, it is investing 32.61% in financial sector, 10.24% in technology sector, and 8.2% in energy sector. If we see the top stock holdings, it is investing 6.93% in SDFC Bank Limited, 4.74% in Bharti Airtel, 9.09% in ICICI Bank, and 4.64% in State Bank. And if you see the Mirae Asset Emerging Bluechip Fund, it holds 70 stocks in its portfolio. If you see the allocation by market cap, it is investing 55.68% in large cap, 34.58% in mid cap, and 9.09% in small cap. If you see the allocation by sector, it is investing 27.43% in financial sector, 10.04% in automobile sector, and 13.43% in technology sector. And if we see the top stock holdings, then it is investing 5.45% in SDFC Bank Limited, 5.43% in ICICI Bank, 4.79% in Infosys Limited, and 3.9% in Axis Bank Limited. Let us see the risk measures which will help us to do the selection in any of this fund if we are planning to invest. Okay, so the first parameter is standard deviation. It gives an idea about how volatile the fund returns has been in the past 3 years. Lower value indicates more predictable performance. Higher the standard deviation, higher is the volatility of the fund. Okay. The second parameter is beta. Now, beta gives idea about how volatile the fund performance has been compared to similar funds in the market. Lower beta implies the fund gives more predictable performance compared to similar funds in the market. A beta greater than 1 indicates that the stock price is more volatile than the overall market. A beta of less than 1 indicates that the stock price is less volatile than the overall market. A beta of 1 indicates that the stock price moves exactly identical to the market. The third parameter is Sharpe ratio. Sharpe ratio indicates how much risk was taken to generate the returns. Higher the value means fund has been able to give better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. And the fourth parameter is alpha. Alpha indicates how the fund has generated additional returns compared to the benchmark, which is nothing but the index. Remember, higher the beta, lower is the alpha, and vice versa. Standard deviation and beta must be as low as possible, whereas Sharpe ratio and alpha must be as high as possible. Now, if you see these 4 criteria, Axis Growth Opportunities is beating all these 4 criteria very well, and it is well within the range. Standard deviation is low, beta is low, Sharpe ratio and alpha both are having very good ratios. They are giving better risk adjusted returns. Now, if we see Canara Robeco fund, then it is not beating standard deviation and beta criteria, also the alpha one. It is only giving very good Sharpe ratio. When it comes to ICICI large and mid-cap fund, we can see its standard deviation is high, means it is very highly volatile, whereas less 3 parameters are meeting the criteria. For Mirae Asset Emerging Bluechip, we can see standard deviation and beta, they both are not meeting the criteria, whereas Sharpe ratio and alpha, they are meeting the criteria. So this was about the risk measure which will help us to take the decision whether we can go for this fund or not. Okay, so let's move ahead. Let us see the downside protection now for all this fund. Downside protection is the very important parameter when we do selection for any of the fund. Now, it is better to choose funds that beat the benchmark by protecting gains during market falls. If we consider downside protection independently, it is more common than a coin toss to see an active fund falls less than the index. Okay, so I hope you understand. So what are we seeing in downside protection? We are seeing that how our fund is falling when the market is behaving. When the market falls, whether our fund is falling more or less. That is what we see in downside protection. A fund which falls more compared with its benchmark is not giving good downside protection, whereas a fund which falls very less compared with the market gives very good downside protection, and that we'll see from the data now. Okay, now if we see the first 1 week criteria and 1 month criteria, we don't have to see because they both are positive. But if we see the 3 month criteria, the category average is minus 8.02%. Okay, and the three of the funds like Canara, Robeco, Emerging Equity, ICICI Large and Mid Cap, Mirae Asset, Emerging Bluechip, they are falling less when compared with the category average. So they are giving good downside protection in 3 months, whereas Axis Growth Opportunities Fund is falling minus 11.18%. So the downside protection is not good. And same we can see in 6 months as well, where the category average is minus 10.33. Only ICICI Large and Mid Cap is the fund which is giving minus 4.98. Okay, that is the only fund which is giving good downside protection in 6 months. And if we see the YTD, then we can see that again ICICI Large and Mid Cap is giving minus 0.79 against minus 7.57% of category average. Less all are giving more, means falling more, right? And in the 1 year period, we can see only one fund, which is Axis Growth Opportunities Fund, is giving negative return, that is minus 0.70% versus 4.14% of category average. And if we go beyond that, 2 years, 3 years, 5 years, and again, right, then we can see the returns are very good. Every fund is able to beat the benchmark. Correct? So what we learn from this? We learn from this that we have to select the fund for when the market is going down. And there is one more thing which a person like me is learning from this, is that if I am selecting a fund for long term, then the downside protection doesn't, I mean, it does matter. But then if I'm investing for long term, then the downside protection will get overridden over a period of time, because then the returns would be good. So if I'm planning for a long term fund, then I have to see all these parameters which we have just learned. I hope it is clear and you have learned. So the next one is benchmark comparison. Very, very important factor when you select a fund. Okay, so let's see. So the first fund is Axis Growth Opportunities Fund. Now we can see Axis Growth Opportunities Fund, when it has started, it was not beating the benchmark, but slowly since the mid of 2019, it has started coming up very slowly. And during the COVID period also, it has surpassed the benchmark. It is going very parallel in the benchmark, but in the mid of 2020, it has started picking up, and since then till today, it is beating the benchmark continuously. So that is a very, very good factor when we select a fund. A fund which beats the benchmark continuously is the fund which I can invest. That is my favorite fund for investment. Okay, so this is one of the most important criteria, a fund which is beating the benchmark, because if it beats the benchmark, that means I am going to get good returns. As simple as that. If we see Canara, Robeco Emerging Equities Fund, this has been fantastic since 2014. You can see it since 2014 till 2022, it is continuously beating the benchmark. Again, very good parameter if you want to select the fund. Okay, ICICI Pru Large and Mid Cap Fund. Now this fund is bit, when it started, it was not that much good. Then over a period of time, that is from 2014 till 2016, it was okay. Then again it is picked up, from 2016 till 2018 and 19, it is okay. Then again it is going parallel during the COVID period till 2021 mid, and from 2021 mid, it is again picking up till 2022. So I mean, going down, coming up, going down, coming up. So not a constant feedback, not a constant effort to beat the benchmark, right? Then if we see Mirae Asset Emerging Bluechip, this is also fund just like Canara, Robeco, continuously beating the benchmark since 2014, right? So I hope you have understood the benchmark comparison very well, and you will be using it when you select a fund, right? Now let us consider that we are investing 5,000 per month in SIP in all these funds, and let us see the returns. So for Axis Growth Opportunities, let us consider that it will be giving us the returns of 20% in the next coming years. The assumption is 30 years. Okay, so for the 10 years, we will be able to generate 19,11,818. In 20 years, we will be able to generate 1,58,07,397. And in 30 years, we would be able to generate 11,68,04,009. For Canara, Robeco Equity Fund, again it is giving 20% returns. So the returns are not going to change. It is going to be same like Axis Growth Opportunity Fund. For ICICI Large and Mid Cap Fund, since it is giving 40% return, and we will consider that it will be continuing to give 14% in the next 30 years. So after 10 years, we will be able to generate 13,10,457 rupees. In 20 years, we'll be able to generate 65,81,731, and in 30 years, we'll be able to generate 2,77,85,278. And when it comes to Mirae Asset Bluechip Fund, it is giving 22.61% return, and we will consider this for the next 30 years, okay, for calculation and assumption purpose. Okay, so for 10 years, we will be able to generate 21,79,321. In 20 years, our wealth would grow to 2,14,59,738, and for 30 years, it would be 19,20,33,252. So this is how the returns would be if we invest 5,000 per month in SIP in all this fund. Okay. Now let us consider that we are doing a lump sum of 1 lakh in all these funds. So if we consider the lump sum of 1 lakh in Axis Growth Opportunities Fund while considering 20% return for the next 30 years, then for 10 years we will be able to generate 6,19,174. For 20 years, we will be able to generate 38,33,760, and for 30 years, our wealth will grow to 2,37,37,631. Same with Canara Robeco, because it is also generating 20% returns. And if we consider ICICI large and mid-cap fund, it is giving a return of 14.57%. And if we consider this for the next 30 years, then in 10 years, we will be able to generate 3,70,722. For 20 years, we will be able to generate 30,74,349, and for 30 years we will be able to generate 50,95,016. Now when it's come to Mirae Asset Bluechip Fund, the lump sum is totally blocked in this fund now, as of now. But let's say that it in the coming period it is opening lump sum to all of us, and we know that it is giving a return of 22.61%. And if we invest 1 lakh in this fund, if this fund is allowing us to do a lump sum, then we will be able to generate a corpus of 3,89,75,789. Again, I am telling Mirae Asset Bluechip Fund, you can only do SIP as of now, because the lump sum is totally blocked and it's not allowed. So keep this point in mind. Okay. Thanks for watching. Please note, mutual fund investment are subject to market risk. Past success does not guarantee any future performance. Now, if you want me to be your mutual fund distributor, and if you want to plan your goals like buying a car, home, children's education, international holiday, retirement, or even starting your own business, then please fill in the data in the Google sheet given, and I will be more than happy to have a discussion with you. Okay, please comment and let us know how did you like our video. Also, if you are new to our channel, then please subscribe and hit the bell button next to it. Don't forget to create your free lifetime account on AssetPlus for investment in mutual funds. That's all for now. See you in the next video. Till then, take care.